Hello and good afternoon, good evening, everyone. How are you all? Come on, give me a quick thumbs up for the video, audio, and the text. Are you able to see this all? Okay. So in the last lecture, we have discussed majorly about the accounting principles, which we have assumptions we have talked about. And now we are going to jump to the very important practical aspect of accounting from where we will prepare the account balance sheet, P&L, and the journal entries. So basically, we will start with the journal entries and then we will move ahead for the balance sheet, P&L, and everything. What we have done, we have right now already covered the business basic assumptions for accounting. That is your business entity concept. Then we have studied about the going concern. What does business entity concept says? That business is different and your entity and the person individual is different. So if I am Mr. A, so A enterprise is different than Mr. A. That is the business entity concept. Then we have the going concern concept that our business will run towards the infinite period of time. There is no intention to end the business into the short period. Then we have the money measurement concept, which says everything can be equated in terms of money that will be recorded as the transactions. Rest will not be considered. Then we have the accounting period concept, which means that everything which we are recording that is for a certain period, which can be a financial year or which may be your calendar year as well. So these needs to be considered while booking your profit and loss. You have to uh, address some period according to which you can decide what is the profit for that period, what is the loss for that period, and what is the profit for the previous period, so that you can compare that the last year profit was 20,000, let's say now the profit has been 15,000. So what is the reason of being reduced profit by 5,000? That is analysis which uh, we can do. Okay, so that is what this is all about. Then last we had the accrual concept, that whatever is due that needs to be recorded, whatever is due but not paid. So whatever is due but not paid, those are your accrued expenses. Those are your accrued expenses. But whatever is due but not received, those will be your accrued revenue. For example, I am a shopkeeper. I have sold goods on credit. Let's say 1,000 rupees goods I have sold on credit. The customer said, I will give you money after 1 month. So obviously that this amount is due at present, but it is not received, but it will be receivable in the future. Therefore, I can accrue this amount. Am I clear, everyone? Just give me a quick thumbs up. Is it clear to all? Shall I move ahead? Okay. Now we are going to talk about some different aspects which would include your accounting. Okay. So, so for every single thing, what you need to do, you need to understand some basic scenarios. We will take some examples, and according to that example, we will see what are the accounting treatment for that. Okay, let's do the basic ones. So the basic, most basic, I would say, which is ever there in the accounts. Mr. X. You can also write down along with me so that you have a notes prepared on a regular basis. Mr. X started business. The name of the business was X Enterprises. and introduced rupees 50,000 cash, introduced rupees 50,000 as cash as capital. Okay. For example, this is the transaction which you have been given. Always and always understand, in accounts, we always do the prior period accounting. That is the historical accounting. The transaction is already incurred. Now we are doing it into the books. Okay. So now see, this person, his name is Mr. X, and he has started one business. The name of the business is X Enterprises. So in this X Enterprises, how much money has been introduced? How much money has been introduced? Come on, everyone, tell me that. How much money is introduced? So Mr. X has given rupees 50,000 cash to X Enterprises. So in the X Enterprises, I can say the cash is in. Cash is in, that means it is coming in 50,000. But do you think that X Limited will ask this money back from the business when the business is closed down? Obviously, yes. If I have invested some amount into a fixed deposit, then when the fixed deposit is matured, I will take that money back from the bank along with the interest. Answer is yes. So if Mr. X has invested some amount into the business, then when the business will close, business has to pay back Mr. X the amount which he has invested. So business has to pay rupees 50,000. This is what? This is an obligation. This is an obligation. And what does this obligation is called? This obligation is called capital. This obligation is called capital. Why it is called the capital? Because it is the owner's fund. It is what? Owner's fund. Who is the owner? Mr. X is the owner. So anything which is invested by Mr. X into the business, it will always called capital. It will always be called as capital. Is my point clear to everyone? Come on. Is it clear? So anything which is invested by Mr. X, that is called capital. So capital would be 50,000 rupees. Now, what does the accounting equation says in that? So accounting equation, what do you mean by accounting equation? It says that all the assets is equals to capital plus liabilities. I will shift it a bit. All the assets is equals to your capital plus liabilities. That is the basic accounting equation which is given. So what do you mean by assets? This we have already discussed. Assets is everything which is owned by business and will give future economic benefit. So anything which is owned by the business is called asset and it will give a future economic benefit to the entity. Okay, got it. That is called as assets. Now what is capital? Capital is the owner's fund. or you can say the investment from the owner. So owner can be the sole proprietor, he can be the partner, or he can be the company, the shareholders who are the owners of the company. Am I clear? So anybody could be the owner. If it is a sole proprietor, then we have to see that Mr. X is the case. In the partnership, there might be more people, like for Mr. X, Mr. Y, Mr. Z, who are running a firm called XYZ and company. For that, these three are the owners, XYZ. Okay. And if there is a company, all the shareholder will be the owner. Okay, I have got that point. All the other obligation, for example, I have taken a loan from the bank. So is the bank owner of my company? Answer is no. All the other loans or the other obligation other than the owner's fund will be termed as liability. These are the obligation which will result in future cash outflow. So these are the obligation which will result in what? The future cash outflows. Am I clear? So this is your accounting equation. Now from the above example, what we can see? From the above example, what we can see that we have got a cash of rupees 50,000 and against that there is a capital of 50,000. So here in my asset, it would be plus 50,000. In my capital, it would be plus 50,000. Liabilities are zero at the moment. So what is the equation? 50,000 is equals to 50,000. So my equation will always match. Why does this accounts always match? Why this equation will match? Because this is the golden rule. Every transaction will have two effects. Every transaction will have two effects. It may be any effect, okay, but it will have two effects. And hence, accounting equation will always match. The accounting equation will always match. How will it will match? That the assets will be equal to your capital plus liability. Assets will be equal to your capital plus liability. Right now, I have just discussed only one parameter, but now we are going to discuss more such transactions. Okay, now let us do some of the transaction. First transaction was Mr. X started the business with rupees 50,000 in cash. Now the second transaction. Mr. X purchased furniture of rupees 10,000. Mr. X has purchased the furniture of rupees 10,000 and paid the amount in cash. He has purchased furniture for 10,000 and paid the amount in cash. Now let's see where my accounting equation is looking like. So we have assets, we have liabilities, we have capital. How much is my asset at the moment? Currently, I have 50,000 of cash as my asset. Liabilities are zero. Liabilities are zero. And we have the capital of 50,000, which Mr. X has invested. So that is your capital. Owner's fund. Now what the transaction says, it says that Mr. X has purchased furniture of 10,000 and paid amount in cash. So obviously when he has paid the amount, what will it happen? The cash balance will reduce. It will reduce by 10,000. So now how much the cash is left? The cash is left as 40,000. The cash is left as 40,000. But now the business has got furniture. The business has got furniture. And now whether the furniture is an asset or it is a liability or it is a capital. Sir, what is capital? It is the owner fund. So whether the furniture is owner fund, answer is no. What is liability? Liability is an obligation which we need to pay in future. So right now I have already paid for this furniture. I don't have to pay. So it is not a liability. Whether is an asset? Yes, obviously, if anyone will come to my office, he needs some chair to sit. He needs some desk, table, etc. The basic furniture, sofa set, everything. So that is an asset. So my new asset will be increased by. So I had furniture. Earlier, the amount of furniture was 0, but now I have purchased it. So it will be plus 10,000. So what is the total of the asset side? It would be 10,000 rupees of furniture, 40,000 rupees of cash. It would be again total 50,000 and it would be equal to liabilities is 0 and again capital is 50,000. Is my accounting statement still holding correct? Yes or no? The answer is yes. 50,000 is equals to 50,000. Now let's take one more example. Okay, Mr. X in this case has paid in cash. Now one more. Mr. X purchased machinery of rupees 30,000 from Chinese Limited. Chinese Limited is the name of the vendor. He has purchased the machinery of 30,000 from Chinese Limited and will pay after 6 months. So right now, as on current date, we haven't paid anything. This needs to be paid after 6 months. After 6 months, this will be paid. Okay, got it. Now, what to do in this case? Mr. X, he has purchased the machinery. For how much amount? That is 30,000 from Chinese Limited. So what is my accounting equation as of now? It says assets is equals to liability plus capital. How much is my assets? So I have furniture of 10,000 rupees plus I have cash of 40,000 rupees. We have 0 rupees of liability and we have capital of 50,000. Now everyone think about the transaction and tell me what will happen. What will increase by how much? Come on everyone, think of it. I will give you 2 minutes time. Think of it. What will happen? Whether the liabilities will increase, whether the capital will increase, whether the assets will increase, and what would be the total of my accounting equation? How much will be the total? Try everyone. Come on, give me your answers. Wow, I've got some answers here. Asset will increase by 40,000. Okay. Liabilities and assets both will be increased. Okay, good. Total 80,000. Amazing. Lovely. Amazing. Wow, that's correct. Now let's see what the transaction says. Mr. X. Mr. X, what does Mr. X has done right now? Mr. X has again purchased. What he has purchased? Machinery. So machinery, whether it is a liability? No, machine is an asset by which we can produce more and more items, right? So it is an asset which is purchased. So my assets will increase. That would be my machinery. That will be my new asset. It would be increased. What is the cost of machinery? It is 30,000 rupees. But whether have I paid for this machinery? The answer is no. I haven't paid for this machinery. So what will happen? Whether I need to pay in future? Answer is yes. So that is what liability is called. That is the liability which has been increased. I need to pay 30,000 to Chinese Limited in future. So for that, my liabilities will increase by 30,000 in the name of Chinese Limited. So what is the total of my accounting equation now? It is 10,000 plus 40,000 plus 30,000. On the LHS, it is 80,000 and asset plus liability is 30,000 plus 50,000. It is again 80. All please confirm. Is the concept clear? Some has mentioned that the cash balance will be 10,000. Answer is no, I haven't paid that. I will pay after 6 months. So right now, cash balance will not change. Okay. So now if I say what is the structure of this account? So see, now I will deep dive into the concepts. 50,000 was brought by the owner. 50,000 was brought by the owner. This is your capital. Now what we have done from this 50,000, I have purchased furniture of 10,000. So I have a set of 10,000 and 40,000 still I have cash in my hand. So this is the 50,000 which I have taken from the owner. For every business, either you can invest yourself and or you can take money from others. So whatever you have invested from yourself, that is called the capital. And now what I have done, I have taken machinery, that is a credit from others. This is a credit from others. So it is a liability. From this 30,000, what has been done? A machinery is purchased. And what does that machinery cost? That is 30,000 rupees. So this is the on the right hand side, you can see these are the sources of finance. These are the sources of finance to my business. From here, I get the money. From whom I can get the money? I can invest myself, like I am the owner, so I can invest myself, or I can ask from someone else to invest in my business. So that is my liability. I need to pay this liability in future. Okay, so these are the sources of my finance. That is on your right hand side. That means your liability plus capital is nothing but your sources of finance, where capital is your own fund and liability is others fund. Okay, now let's talk about asset. Asset is nothing but the application of your fund. So I had my 50,000 here. 50,000 is invested into 10,000 in furniture and 40,000 is kept as cash. And we have some investment from others, 30,000 that has been used to purchase the machinery. Obviously, after 6 months, now what will happen? Let's go to the fourth transaction. After 6 months, we paid Chinese Limited in cash. We have paid the Chinese Limited in cash. So what was my accounting equation? The asset is equals to liability plus cash. What we have in assets, we have furniture, which is of 10,000. We have cash, which is of 40,000. We have one machine, which is of 30,000. These are all my assets. What we have liability? In liability, we have Chinese Limited, who is the vendor. He's the vendor who has sent who has sell us the machine. So he sent 30,000 rupees in the form of machinery. And we have capital, which is the owner's fund. It is 50,000. So this was my equation prior to the fourth transaction. Now let us see what will happen after the fourth transaction. 6 months has been elapsed. Now we need to pay Chinese Limited. So if I have paid him in cash, what will happen? My cash will reduce by how much amount? How much amount? We have purchased the machinery for how much amount? 30,000. So my cash will reduce by 30,000. My cash will reduce by 30,000. So my cash will reduce by 30,000 here. And if I have paid the Chinese Limited full amount, like for example, 30,000 was due and I paid the full amount of 30,000. So I have now no amount due to him. My liability will decrease by 30,000. So my new accounting equation would be 10,000 rupees of furniture. Now 40 minus 30 would be 10,000 rupees of cash left, because 40,000 I had earlier. 30,000 is paid. Now how much is left? That is 10,000. And machinery will be the same as 30,000. How much is my liability? Plus 30 minus 30. It will be 0 because everything which is liability, I have paid it now. Okay. And then we have finally the capital of 50,000. Now check the total. It is 50,000 equals to 50,000. Am I clear, everyone? Any doubts? Now I will give you, this was one example, this is over. I will give you some cases. You have to calculate the accounting equation after each transaction. So note down the question. Calculate the accounting equation after each transaction below. First transaction. Mr. Y started business with cash rupees 80,000. He started the business with cash of rupees 80,000. Second, Mr. Y purchased furniture of rupees 30,000, furniture of rupees 50,000, 30,000, and paid 50% now, and balance will be paid to Mr. B after 2 months. And balance will be paid to Mr. B after 2 months. So in this case, furniture will be your asset will increase by 30,000. You have paid 50% now, so your cash will reduce by 15,000. That is 50% of 30,000. Your cash will reduce by 15,000, and the balance 15,000 will be your liability. So your liability will increase by 15,000. But I want you to try first before me solving this. Why paid to Mr. B after 2 months? Yes, paid to Mr. B after 2 months. Fourth transaction. Mr. Y purchased machinery on credit. On credit means what? That he has not paid from ABC Limited for rupees 1 lakh. He has purchased the machinery on credit from ABC Limited for rupees 1 lakh. And last transaction. Mr. Y withdrew rupees 10,000 cash from the business. He has withdrew 10,000 cash from the business. Now what you have to do? You have to prepare the accounting equation after each transaction which is mentioned below. Come on, everyone. Try this. You have 5 minutes. Come on. Wow, I've got many answers. Come on, everyone else. Okay, everyone. Time's up. Now let's try. Based on the first equation, what they have mentioned, Mr. Y started the business with cash of rupees 80,000. Let's do that. The accounting equation would be your assets will be equal to I'm receiving some replies that the screen is lagging. Okay, I will check. Check if it's working now. Are you able to see this? The asset is equals to liability plus capital. So your assets will increase by 80,000. Liabilities is zero at the moment, and your capital will increase by again rupees 80,000. That is the first treatment which you will do. That is the first treatment which you are going to do. Okay. Second, Mr. Y purchased furniture for rupees 30,000, and 30,000 has been paid 50% at right now and 50% after 2 months. So if I have bought something that is furniture, my assets will increase by 30,000. So that would be plus in furniture plus 30,000. And for this 30,000, what I have done, I have paid 15,000 in cash, so my cash will reduce by 15,000 and my liabilities would increase by rupees 15,000. So my new accounting equation would be 1,10,000 on your asset side and sorry, not 1,10,000. It would be 80,000 minus 15,000. That would give to 65,000 plus 30,000 of furniture. That would be 95,000 is equals to your liabilities are 15,000 plus 80,000. So that is again 95,000. That is your second accounting equation. I think there is some issue with the screen right now. It is lagging quite more, but this is the last example for today. So let's see. At least you can see hear what I'm saying. Yeah. This is the second adjustment. Let's do the third adjustment. Mr. Y has paid to Mr. B after 2 months. So whatever the amount was due to Mr. B, it has been paid. So now again, my cash will reduce by 15,000 and my liabilities will also be reduced by 15,000 because the amount due as my liability is now paid. OK, so cash will reduce by 15,000. It will give me cash 65,000. Earlier it was furniture was 30,000. Then we have liability of 15,000 and capital of 80,000. So after the third transaction, my cash will reduce by 15,000 and my liabilities will also reduce by 15,000. So the total would be 50,000 rupees cash is left now plus 30,000 rupees of furniture. Liabilities is 0 and capital is 80,000. That is my balance after the third transaction. Now let's do the fourth one. Fourth one says Mr. Y is 5 rupees. So there would be one more asset which is added. So it would be new asset, that is machinery. So my asset would increase by 1 lakh and my liabilities will also increase by 1 lakh because I haven't paid for this machinery. So what will be my new accounting equation? That is 50,000 plus 30,000 plus 1 lakh. That is 1,80,000 on the asset side and 1 lakh rupees of liability from whom? ABC Limited plus 80,000 rupees capital. So 1,80,000 on my right hand side. That is your fourth transaction. This is your fourth transaction. And now let's do the fifth transaction. As per the fifth transaction, that means my capital will reduce. My capital will get reduced. So what was the current situation? Now I have cash of 50,000. I have furniture of 30,000. I have machine of 1 lakh. That is equals to my liability. I have liability of 1 lakh and I have capital of 80,000. This is my current situation. Now, if Mr. Y has taken some money out from the business, so business will pay him less amount from the business. So cash will also get reduced from. So what is the balance now? I have now cash of 40,000 plus 30,000 of furniture plus 1 lakh rupees. Okay, the screen is again giving an issue. Let me share on the screen with you. 1 minute, beta. I think there is some issue with the video. Uh, no, I think it is not working. So let's continue in the next lecture. Yeah. Bye all.